Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be continuing from the last few weeks' videos that I've been doing so that we get a consistency of exactly where we are and where we're heading in this bull market run that we're having currently. We've been having a look at many indicators as well as the exit indicators, so we know that exactly where we are, so we have a bird's eye view of exactly what's happening to Bitcoin, where it's heading, and when we need to get off this Bitcoin train at the end of this bull market. But before we begin, just the usual polite reminder that everything in the video should be taken as for educational purposes only. Nothing in this video or any of my videos should be taken as financial advice. I'm not anybody's financial advisor. I would always urge people to do their wider research, take on board more knowledge, more know-how, and then weigh up the important factors and then come to your own conclusions before making any investment decisions. So with that out of the way, without further ado, let's get cracking. So we'll start off today with the yellow line here, which is the 21 weekly exponential moving average. We've been following this 21 weekly exponential throughout this cycle, but especially since we broke down here. And this was unprecedented from the previous two cycles since 2010, because in a bull market, this never really happened. So when this broke down, this was unprecedented. And what we needed to see to break this bearish pattern here, we needed to get above this 21 weekly exponential moving average, which we did here for the first time. And then we use this as a support from here onwards. And we mentioned in the past that we need to come back here to find support before we move on. We found that this red candle here was very scary because it actually closed just below the 21 weekly exponential moving average. And this was the danger, that if we had another close below it in the following week, then that could have spelt a downward spiral. We said at this point here that we needed a candle to push us back above the 21 weekly exponential moving average here. So since the last few videos, when we mentioned that, we've been going in the upward direction. So last week, we were basically here the day this was going to be closing, and it obviously closed above the 21 weekly here. And now currently we're at this candle, which should be closing tonight, UK 1 AM time. And the reason why this is looking very bullish, because we've had a good bounce off the 21 weekly exponential moving average here, is that historically, as I've shown many times, in a bull market, there is a tendency to bounce like we have done currently and in the previous cycle. Once we managed to get above it here, back in 2015, then this 21 weekly provided multiple support and bounces towards the top of the market. So this is what we're expecting to happen over here, and we're well on our way now. Also in the last few weeks, I've shown you this bump and run phase where we have this lead-in time, the bump phase, and then the run phase here, as shown by this Balkowski pattern here, where we have this lead-in phase, where we have this bump phase, and then this uphill run phase, which is exactly where we are currently at the moment. But if you look closely at this can also be called an inverse head and shoulders pattern here, where we've actually got a descending neckline with the left shoulder here, the head, and the right shoulder here, which again is one of the most powerful chart patterns we find in these markets. So again, once we get to the right shoulder, we've had a breakout here going in the upward direction. So the reason why we're expecting this to continue is because we've now broken this weekly pattern. So weekly is obviously a very high time frame and more important and relevant. So having broken this neckline here, we can now expect it to go much further. How much further will be determined by the opening of this pattern here. If we measure from the base here to the top where the pattern started, that would give us about a 95% uplift from the break here. So taking 95% from the break here would give us around about a 97,900 Bitcoin price very shortly in the next few weeks. So if we round that off to 100,000, so this is what I mean, that once we've broken this pattern, this is basically where it's heading to next. Obviously we'll have our little bumps along the way, but this is where we're heading, to the round about the 100,000 mark very shortly. That doesn't mean this is the blow off top, but this pattern is giving us a clue as to how far it can easily go to first. And if we just adjust these lines, you can see where I'm coming from, because we've just broken this neckline here as well, which is at the top of the bodies of these candles here, as we can see. So we've now just protruded above this neckline. And if we were to close above this neckline, that would be the first body close on a weekly candle above this line here, which is at 59,400, 60,000, let's call it. So should we close above the neckline at 60,000 UK 1 a.m. time tonight, then this pattern is saying we're good to go towards that $100,000 mark. We've also been following the log growth curves lines here, and we drew this 50% Fibonacci retracement line, which is the orange line. And I said that once we get above this orange line, this is a monthly chart, by the way, so hopefully by the end of October, we'll close above this 50% Fibonacci orange line here. And that will give us the nod that we're more than likely going to be closing at the top of this log growth curve in the next few months. And that's based on the bubbles chart that I showed you in the last few weeks. As you can see, we've gone well above the orange line here. This will close at the end of October, and more than likely, by the way the trajectory is going and the bullishness in the market, we may reach this next Fibonacci retracement line here, which is the 61.8 Fibonacci retracement line. And we all know how much affinity Bitcoin has to the 61.8. So this looks like where it's aiming for at the end of this month. And that level currently is at around about the $67,000 mark here. So that's where we're hoping the candle will close by the end of October. And if we were to move above this line here, then we'll be moving towards the $86,000, $87,000 mark in this region here. And here is the bubbles chart, which showed quite clearly that the end of the last 3 months, October, November, December, at the bottom of the log growth curve or at the tops of the log growth curve. So in this first cycle, there was 1, 2, 3 closes at the bottom of the log growth curve, followed by a close at the top of the log growth curve at the end of the blow off top for that cycle. In the second cycle, exactly the same, 1, 2, 3 towards the bottom of the log growth curve, apart from this one here, which was the only one in 11 years that we've had which didn't close at the top or the bottom. But these 3 lower closes were followed by the 4th close at the top of the log growth curve in the October, November, December timeframe. And the current cycle is showing exactly the same, with 3 closes at the bottom here, and now we're aiming for the 4th one. So if these 2 cycles were to be followed, and it looks like with a high degree of probability, judging by this pattern, you'd think that this is what's going to happen. We're now aiming for the 4th close in this cycle, and the close to be at the top of the cycle here. And that is currently at around about the $140,000, $150,000 mark at the top of this log growth curve. So the top is really around about the 150 according to this chart here. I've also been showing you the total crypto market chart here, which includes Bitcoin, Ethereum, and all the other altcoins in the crypto space. As you can see, something incredible has happened this week in the sense that the bodies of the candles have now been breached for the first time by this current candle here. So if we were to close above this white neckline of the bodies of the candle over the last many, many months here, that would be a sign that the whole of the total crypto market is going in the north direction. So very important developments. We're breaking the neckline here. So basically we're on the launch pad for a massive rise to the blow off top, according to this chart, in the next few weeks and months. This break of the neckline is very similar to what happened in the last cycle in 2017. If we have a look at that cycle, you can see exactly what I mean. So before we had the blow off top in December 2017 here, and before this parabolic rise that we had prior to the blow off top, we had this neckline here. And once we broke this neckline with this candle, which is the current candle we've got now that I've just showed you, and that candle was followed by the parabolic blow off top just a few months later. And this candle occurred in the week beginning the 9th of October. Does that sound familiar to anybody? Of course it does. These things tend to happen at the end of the year. So here we are in 2017, breaking of this candle. But look at the next candle after, which is very interesting. Once we broke this candle here, we came back and retested it before we went on this run. So it could well be that we repeat that, but certainly it's not a sign that we're going to be going down after. This cycle would suggest that once we break the neckline, we come back and test it as support before we move on. And the increase we had from here, the breaking of the neckline, to the top of the parabolic rise was about 400%. If that was to repeat currently with the breaking of this candle here, 400% would take us to a $9.8 trillion market cap for the total crypto market. So only time will tell. All we can do is do measurements and look at the charts and interpret them in our own way. But this candle closing tonight above this neckline suggests that we're now on the launch pad towards the blow off top in the next few months. Also in the last video, I drew this very unique line here, which nobody has drawn on any of the videos that I've watched on the YouTube. And that is basically the rejection we got here, and then the head and shoulders pattern that we got here on this support line. And we extended it all along to say that as our price is coming up here, it's going to become relevant around here. So last week we were around here, and we said that the way it's moving is going to be coming around about the $65,000 mark here. But with the movement of the price being so fast, with the huge green candles here, that we've actually met this line right there. And look what's happened. The price has got rejected right on this line that we drew because of this resistance and support lines along this price action here. So the question is, when are we going to break this and move to the upside? All we can say is that it may well be that this proves to be a bit of a correction area, but judging by the way this whole thing has now panned out in this last couple of weeks, and we drew these resistant points, and these are the levels that I gave you last week, around the 58-59 level, and we got a bit of resistance there. And in the last couple of weeks where we've had this parabolic rise here, since we took off around about the beginning of October, we can see that the $59,000 mark I gave you proved to be a resistance, but only shortly, with only a minor 8% rejection at these levels. As I've said many times in my videos, it's easier to find out the levels where the corrections could take place, but we can never tell the depth of those corrections. So that's why it's always a dangerous game to play, to try and second guess the market. But certainly this level proved to be quite a good resistance here. And then the next level I gave you was 61,000. And again, we've come to the 61,000. And as we can see, it's proving to be a bit of a resistance before we move on further. It may well be we come back on this one a little bit deeper in terms of our correction. However, the bullish nature of the rise we've had, I wouldn't be surprised if we go all the way to the $64,000 mark here, which again, I would expect a little bit of a correction. But if we look at the VPVR, it's telling us that there's not much volume at this level, at the 64,000, which tells us that it may well be that we get to the 64,000, but not hang around too long there before we move to the upside from there. So as you can see with the VPVR, we came up to the $64,000 mark here, but we didn't spend much time there at all. So the volume was very, very low. So when we do come up to this level here, I wouldn't be surprised if we just barge through, because there isn't much resistance here. As you can see with these levels, there was a lot of resistance at these points, especially the 58, 59 level, and it seemed to have blown that away without much resistance here. And once again here at the $61,000 mark, there's more resistance than the 64, but again, we've come to a standstill there, and it may well be that we have a correction. However, with the volume being less than the $58,000, $59,000 level down here, it may well be that we go above the 61 very, very shortly and retest the 64 before a quick move to the upside. The question is, how far up can we go after the $64,000 mark is breached? If we do a Fibonacci retracement from the top of the previous cycle at 19,800 to the bottom that we had here, this is how we got the $64,000 top that we had recently, 618 level here. And as you can see, with all of these levels, every Fibonacci retracement level seems to have some relevance. And even here, when we came up to the $48,000 mark, there was a lot of confluence as we saw there. So certainly, if we were to follow this chart behavior here all along this Fibonacci retracement levels, then the 4.236 level here at 75,000 should play an important role as we come to it. So we can expect some resistance at the $75,000 mark once we get past the $64,000 mark. So keep an eye on this level here, 75,000, which is the 4.236 Fibonacci level. So quite a few people ask me, is there any bearishness in the charts? Yes, there is. And if we look at the 6-monthly chart, there is something that unprecedentedly happened on this candle here from January to June. So if we have a look at this candle, this is a very dangerous candle normally. And basically, it's a rejection of higher prices here, as you can see, with a long wick at the top and a little body at the bottom. I know that quite a lot of other YouTubers have actually made this candle the central focal point of their bearish outlook for the future. But actually, if we have a bird's eye view that, first of all, this is just one indicator, although it's a very powerful indicator because it's on a very high time frame of 6 months, and this is very, very powerful. But there isn't very many other indicators that would provide a lot of substantial confluence to this narrative that we're about to go bearish in this direction here. This candle is totally out of character with any of these other candles down here, apart from this one, which was a bullish candle, because here we got the wick at the bottom, and this is what happened. And this is one of the reasons why people think, because we've now got this at the top or near the top of this cycle, that we were more likely to go down here to this direction. But it is out of character to be this type of candle at the top of the bull markets. The second point I would make, which is very important, is that the big correction that we've had with this wick here in the last few months has allowed a lot of distribution in the market to take place. So people have taken their profits at the top of that candle, and because we haven't crashed, we found a lot of support around the $40,000 mark here. And because of that, it's allowed in the last few months for a huge amount of accumulation to take place in this region here. And this accumulation is the same accumulation we got at the bottom of this current cycle last year. So this accumulation is at much higher levels of the $55,000 mark here. And that, to me, and it is only my opinion, and you may obviously disagree with that, the fact that we've been buying a lot of Bitcoins in the $50,000-$60,000 mark currently has allowed this bull rally to be sustained for a lot longer in the upward direction. And this accumulation at these levels is going to support the market to its upcoming peak and the all-time high shortly. Obviously, I could be totally wrong, but that's my view, and only time will tell whether this narrative is going to play out or not. But certainly, this candle would prove to be bearish in most circumstances. But I think this cycle is a little bit different to the previous cycle, and only time will tell which narrative actually plays out. But keep an eye on this and its developments in the next few months. Okay, moving on to the pi cycle. We're waiting for the orange line here to cross above the green line. So when they cross, just like here, we got a cycle top at 64,000. We will get our all-time new high when this orange crosses the green line. And judging by the trajectory here, and as you can see with the parabolic rise we've just had in the last couple of weeks, if that was to continue, this will push up very, very sharply to the upside and will cross, and wherever that crosses, the price action at that point will be the all-time high. And that is obviously based on previous experience that we've had. This was the 2017 blow off top where we had the cross here, and the 2 cycle tops we got back in 2013 here at the blow off top at the end of 2013, and the first blow off top that we got in the middle of 2013, and both occurred at the pi cycle crosses here and here. So we know that these crosses are very, very powerful, and if the price keeps moving in the same trajectory as it has in the last couple of weeks, then this certainly is very, very possible by the end of the year. If not, it could take another month or two after that. Only time will tell, but keep an eye on this pi cycle. Moving on to our 1458 daily moving average, which is the green line here. And as I've shown you many times, that if we take the peak of the previous cycle and draw a horizontal line across where this 1458 will meet, that will be where our blow off top will be. And that's based on the previous cycle. This was the previous all-time high in 2013. And where the 1458 moving average crossed with the horizontal line here, that was where our peak was. So we don't have many data points, but certainly it's a guide. And if we were to have a look at what's happening currently, we're not actually far off this line here, at this horizontal line crossing the 1458. If we have a close look here and extend this green line in the trajectory where it's going, we can see that it's ending around about February 2022. Should we have a parabolic rise here, then the trajectory would change from where we are there to being a little bit more to the upside, and that could bring it back to the end of December this year. So anything can happen, but it's certainly very interesting, the developments on this 1458 moving average. Okay, moving on to the RSI. As we can see, in the first cycle, we had these 2 peaks here, which culminated in these 2 peaks on the RSI. So it was a second peak that led to the blow off top. In the last cycle in 2017, again, we got 2 more peaks above the 93 RSI level, which culminated in these 2 peaks. Currently, we have only 1 peak here, and that was around these levels there, around about 41,000. So we're coming up to this level here in the next few weeks, and as soon as we get above the 93, we know that we will be coming to an all-time high if the RSI was to follow the same as the cycles previously. So we'll wait and see, but this is exactly where we're at the moment. So these are just some of the exit indicators that we'll be looking at when we reach our all-time high in the next few weeks and months. Okay, so just looking at the current 1-hour chart here, just to give us a very current view, we're at the $60,800 mark price level here. And last week, I showed you this channel that we were going through. We had a fake out down here, but then we broke out at these levels. And what we've done is we've broken out, gone to that head and shoulders line that I drew earlier on. We got rejected there and now come back and actually tested this same channel again. And looks like we're back on the upward trajectory again. So it may well be that now we've made a final support at these levels on this channel here, and we'll start to move in the upward direction. If we break this neckline here around these levels, then we're good to go further up in this bull market. And finally, I just wanted to share a few thoughts on the current cycle. Firstly, it is my belief that in this current cycle, that we're coming to the final portion of the 4-year cycle that I've been talking about for the last year and a half. I may be completely wrong, and that's why I always ask people to do their wider research and weigh up all the pros and cons of what other people are saying, and then come to their own conclusions. The downtrend that we made from the April high here to the July lows down here, it appears to me that that's now come to an end. This trend has now come to an end. The reason why I say that is because the downtrend is really all about making lower highs and lower lows. And now this trend has come to an end because we've now made a higher high. Whilst at the same time, as I mentioned many times in my previous videos, this structure around the $30,000 mark has held very firmly, as you can see by these wicks here. We've been rejected multiple times in these wicks, and if the bears were strong enough, they would have been able to push the price down. And in the absence of them being able to do that, this structure tells us that it's holding very, very strong. So we've now really bottomed out from a technical point of view, and we can leave this trend behind once and for all. Of course, Bitcoin can also do this, but judging by the chart patterns, the history, our understanding, our knowledge, and how the cycles are behaving, this seems a very unlikely event, albeit possible. But we also know that there are no certainties or guarantees in the market, and we can only go by probabilities. And the realistic probability is that having made this higher high here, the higher probability is that we're going to be moving in this upward rally rather than the downward rally we've just come from. Now, many people ask me, will we definitely peak in December? Really, we have to get away from this kind of narrative. As I've shown you with the bubbles on the log growth curve, it would seem highly probable that we're going to be topping out any time between now and December. And the goal should be, and certainly my goal is not picking the right month so I can say to people, look, I told you so, or I predicted it. I'm not in the market for predicting. Our goal should be to take advantage of whenever the market peaks, and whether it's in December or January or February, it's irrelevant really, as long as we can look at the exit indicators, and whenever they show us where the market is going to be peaking, we should take advantage at that point. And the main thing we should focus on is to try and get out through dollar cost averaging, because please remember, nobody can predict the absolute top of the market, and to try and do that is actually falling into a trap. So we need to dollar cost average and scale out near the top as signaled by the exit indicators that I've shown you here today. And certainly, if you're going to be trying to second guess this rally as we're going up, you could fall into the other trap of getting caught by the market's ups and downs along the way. And certainly, I'm fully allocated until we get to the all-time high. And many people have asked me, what's the worst case scenario? Well, for me, as I've said about the new highs, if we were to come back down and break this higher low that we created here from this point, if we were to break this point here, which is around about the 39,000-40,000 mark, so if we decisively broke this bottom here at 39,000-40,000, then I would be inclined to protect all my positions from any future losses. Because if it does break this here, we have no idea where it could go from there on. Yes, we'd probably find some support at these levels around here. But if it can break this level, it can also break these levels and go much further. So we need to really protect our funds. And this would be the point that I would be inclined to take all my positions out. But that's for me. Everybody has to make up their own decision. And that's why you should always do your wider research. I can only tell you what I'm prepared to do in a worst case scenario here. Okay, so we'll leave it there. I hope you found value in this video, and if you did, then please do remember to like and subscribe if you haven't already done so. And if you want to leave any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.